Eric Mwathe for the weekend of March 8th, March 9th, 2014. Let's take a look at how markets ended here on Friday. We see the Dow slightly up 0.19. Nasdaq was down about 0.37. S&P 500 unchanged. Gold was down 1%. And crude oil was up 1%. If you take a look at the other bigger movers, I think I saw silver was down about 3%, copper was down about 4%, and natural gas was down slightly 1% to the downside. So let's take a look at how the markets did for the week. We begin with the Nasdaq here. For the week, the Nasdaq was up 0.65, which is now making it week number, I believe, week number 4 since that breakout there. So let me see, 1, 2, 3, 4 weeks straight above that breakout. That's a very strong market. We see that the RSI is still holding above 69.18. If we take a look at the S&P 500, closing above 69.10, and we see that it is now week number 2 after breaking out above this previous weekly closing high there. So that still looks healthy. And for the week, we see that it was up 1%. The Dow was up 0.8%. It is getting ever close to this breakout level here of about 16,500. So the Dow is lagging slightly, but looks like it wants to eventually take out that high. Maybe, maybe not. Let's take a look at the Nasdaq here on a weekly chart, and we can see now with the annotations, again, 4 weeks up above this previous buy point. What is interesting is always be careful whenever a market is trading above that 69.10. It's a sign of strength. So not surprising the market is doing well there. Now if we take a look at the Nasdaq Daily, we see that it's taken about a week or so, but we still have the same negative divergence. We are making higher highs and we are still making lower lows in price. Actually, over the last 3 days or so, we seem to have formed a double top. And I can show you this in a different setting here. Give me a second. Now, if you take a look at this chart, again, the Nasdaq Daily, you see that this seems to be some type of a double top here on the daily. And that double top, you can draw it like negative divergence like that, and then that way. So I think this has some type of bearing into what the market is going to be looking to do here. I think if you draw a line there, you see the resistance. Last time we had resistance here was this level here, and we had a drop in the price range there, and so we see that we are finding other resistance levels just around that level. I think somewhere around here, to me, seems like confirmation that the market is probably looking to go down. That's what it seems like to me right now. Now, if we go to the Nasdaq hourly chart, to confuse you even further, you're going to see that if you take the hourly closing low there, hourly closing low, and an hourly closing low there, you get a straight line, and that line is right there. And you can see the market seems to be wanting to bounce off this line somewhere around here. So if it holds, could be good for another bounce. If it doesn't, then we see that it's going to be the first break on an hourly chart. Otherwise, right now it's holding steady. Also, another way to take a look at this is if you take a look at this line here, this green line that I'm drawing was a nice entry point here, which was this entry point there for a nice move. It was support again here, which was this entry point here, and we see we've bounced off this green line there again. So that could be an area where the market wants to move higher on the hourly chart. So the hourly charts, unlike the dailies, are showing support. The dailies are showing resistance to the upside. So I think there's going to be a fight and a confusing scenario here. Also, if you draw a line like this here, right there, this line was good entry point here, which was this entry point here. If you come back, we bounced off this line here, which was this nice entry point, and we found support here, which was this nice entry point. So lots of things pointing to a market that could stabilize, especially if we take a look at the 30-minute. Now the 30-minute also shows a similar looking, if you draw a line there, this green line, let me make a double line there. So this level here was a nice entry point here, which was this lows, support here, it was that low there, support here, which was this low, and you see that now we are back at support level. So if this continues being the case with the market moving higher here, more than likely we get a move higher. The only thing is we have to be careful, because it is not unlike the market to confuse everybody and break down here. And also you see that there seems to be some type of support there on the 30-minute chart. So anything above the blue line or the green line is support. Anything that breaks that support is going to be pushing this market lower. Also, if we take a look at the MACDs on a 30-minute chart, you see that the MACD is starting to look like it wants to go above 0, and the other MACD looks like it wants to coil. So if both of them move above 0, then that suggests that the market is going to be moving higher beginning part of the new week. But who knows, maybe we might open Monday or sometime Tuesday, and the market could actually end up breaking this support level here on the 30-minute chart. So it's something to watch. Hourly charts and 30-minute charts show a sign of a bounce. Daily charts show a sign of a pullback. So there's a fight as far as the visual analysis is concerned. Now, the one thing I have to point out is on the monthly chart for the Nasdaq, once you understand what happens to markets when they move above 69.10, this is exactly what happens. Is markets are very strong. It doesn't matter whether it's a market or a stock or an ETF, anything that is trading in the market. Once the RSI trades in this 69.10 level here, don't be surprised to see strength. So, until the Nasdaq can actually break below the 69 level, you have to respect the power in the market, and that's why the market just refuses to go down. I believe the reason, for my own understanding, is the fact that this market has its RSI on the monthly trading very high. This is not a sign of overbought condition. This is a sign of strength. It's as simple as that, sign of strength. So the market is very strong. It needs the market to really break down back below 69.10 for this market to start changing its makeup or how it trades. We don't get a serious pullback until the Nasdaq and all major markets are trading below 69.10. Now let's take a look at the Dow Weekly Chart. And again, the Dow needs to break out above 16,478 for it to be a fresh breakout. It closed at 16,452. So it's about 30 points away from a breakout. So next week or the new week, if it can hold above that, that's going to be a breakout for the Dow. If it doesn't break out above 16,478, then maybe this is where we start seeing signs of a pullback. Don't forget that the RSI is trading slightly lower than where it should be. You want your market to be breaking out to new highs and the RSI to be above 69.10. So I think if the market pulls back from here, we might have a negative divergence also on the weekly chart. Take a look at the Dow Daily, and you can see the Dow Daily. We have this red line here. Now this red line that I'm now going to draw in green right there, if the market can't hold above that and we coil down, then this is going to be a negative situation because it's a failed back test. So right now it looks like it's around that level. Again, if I go back to my shorter time frame, which is the Dow 60-minute chart, so the Dow Hourly, you can see the Dow Hourly shows that there's some type of negative divergence. As you can see, we are making lower lows here, especially lately, lower lows, yet the market has been making higher highs. So that negative divergence to me might suggest a pullback, just based on the fact that if the market cannot hold above this RSI top lines, there's a pullback in store. Now if we break out above that, watch out, this market is going to take off. So we'll see what happens. If you take a look at the Dow 30-minute chart, same scenario. We are still to break out above this declining RSI top lines. So this continues to be some type of negative divergence. Unless the market can break out above that line, this market is going to have to pull back. Now if we take a look at the Dow Monthly, let's take a look at the Dow Monthly. And the Dow is very close to 69.10. So you need to watch that. Any movement that breaks the Dow and brings the Dow to this level here above 69.10, and also a breakout on the monthly above December monthly closing highs, that could suggest a market that wants to take off and really accelerate to the upside. So let's watch, let's be careful here, because anything bringing the market above 69.10 on the monthly is going to suggest a market that is really very hard. If you take a look at the Dow Transports Weekly, you see that this week they broke out. It's a breakout here with a 3% gain for the week, closing above 7,466. So we'll see what happens, and you can see the RSI is trading where it needs to be at above 69.10. So if this continues being the case, this could continue pushing higher. If we take a look at the daily, you see that it is possible that this is a breakout. As you can see, it's above this declining top line. So this, to me, right here is a breakout. Okay, but now it's a tricky breakout, because you'll notice that if it does something like that on the RSI, then this is going to be fake. Just like this here, this spike here was a fake spike, led to a sharp sell-off. So we'll see what happens. Right now it looks like it wants to move higher, but I'm not sure. I'm not convinced, because it needs to be trading somewhere above that line there, above 2014 highs. So it hasn't moved to 2014 highs yet. So I'm thinking this could be a trap. We'll see what happens. If we take a look at the S&P 500 weekly, you see that we are in week number 2 of this breakout above 1842.37. So that's looking good. We also closed above 69.10. So this is looking like it could move higher. I don't want to say this is, to me, this is a good breakout, unless it moves back below the breakout, unless it breaks back below 1842. Right now it looks like a decent breakout. If we take a look at the S&P 500 from a daily chart, and we see that we still could end up with a negative divergence, just because the RSI is still lower and we are making higher highs. As of right now, I was expecting we've been expecting resistance at this level here. We're expecting resistance somewhere here. It hasn't happened. So what I can say from this is the possibility that the market could continue pushing higher is there, because all it takes is just a slight move here, and before you know it, there's no more negative divergence. So I'm going to let the market decide on this one. I would say be careful here with the S&P 500. Unless it starts going down and confirms the negative divergence, it could very easily continue pushing to the upside. The S&P 500 60-minute chart is where we start seeing red flags. Again, higher highs in price on the hourly, like that, but we are making lower lows in technicals. So this here on the hourly is what could suggest that the daily chart is a trap. Okay, so that's what it seems like to me as far as the S&P 500 hourly chart. If you take a look at the QQQ, we spent a whole week moving higher, but notice the RSI on the QQQ still gives us negative divergence. So that negative divergence, as far as I'm concerned, is the reason why we're going to be seeing this market pull back. In fact, this is, to me, the strongest chart is this chart right here. This chart tells me more than likely we're going to get a pullback in the market, because these higher highs are not being confirmed by higher highs on the RSI. And that's my thinking right there. If we take a look at the Russell 2000, you see that it is still finding resistance on this top channel here. Okay, and also the RSI is not decisively above this area where we've been expecting resistance there. So personally, I would still look at this as a trap. Now I would change my mind if we break out here above that level, but right now it looks like this could be a trap, especially given the fact that the RSI could stall somewhere around there, right there, and also the fact that this has been consistently preventing this from moving higher than where it has been. So I think more than likely my thinking here is we get a pullback in this market, probably even a major high. Now let's take a look at Apple here, and what I'm looking at here is a stock that could, still trading in no man's land. You can see on a weekly chart, if you take the highs 2012 and draw a line connecting the weekly closing highs, you see that line there, and then there's another one coming from, oops, let me draw that different, another line coming like that. So you can see the stock on a weekly chart is still trading in this channel. So one way or the other, we might get a breakout, maybe a failed move on one side, and then the true move is gonna, sometimes the market is gonna give you a fake move either to the upside and then eventually head lower, or it could fake you down with a break and then eventually break out. Markets can do all sorts of things. As of right now, I'm looking at this chart and thinking to myself, okay, nothing here that tells me to look at this as a decisive move one way or the other. So we are still trading in this wedge. One way or the other, we break out or we fail. On the daily, same scenario, but what I'm watching and looking at here is we had this failed breakout at the 50-day moving average. We have resistance at the 50-day moving average again, and then again right now resistance at the 50-day moving average. And also the RSI seems to be forming some type of declining resistance there. So I would say if you want to go along the stock, wait for it at least to prove itself by going above the 50-day moving average, or at least if it can break out above the declining top lines on the RSIs when you can go long. Otherwise, the best way to go long, in my opinion, is to wait for it to break out above that monthly closing high of December, and that's going to be at a price of 557.68. So wait for the stock to break out above 557.68, which is this monthly closing high. If it can break out, then maybe it has a chance to see higher prices, and that would be the best way I would actually do that. If you want to short the stock, then wait for it to break down below 500, which is the lowest monthly close. So 500 is the lowest monthly close. If you want to go short, I would wait for it to break below that price. So you have a buy point to the upside, and you have a sell point on the way down, which is about 500, which is this monthly closing low of January. Eric Mwade. For those of you who are subscribers, we are going to continue. Those of you who are not subscribers, have a great weekend. See you during the next weekend's market analysis. So for now, subscribers, let's continue on.